Welcome back and good morning. This is Saturday morning, Nigerian local time. So I'm doing these videos for Friday market review. So as we all know, the Friday market closed at 4 o'clock or 5 o'clock p.m. New York local time. So which is already midnight Nigerian local time. So we had a whole lot to talk about since the Friday is always the end of the week, and it is the day we see before we now determine what to expect next week, the coming week. So, and from what we have seen is that the price has delivered efficiently and beautiful, so beautiful price delivery. Like the price delivery lower was so beautiful, and I don't know why. It's just the way it is anticipated to be. But if this is your first time stumbling on this page, please do us a favor, subscribe to this YouTube channel, which is subscribe to this YouTube channel at Digital Wealth Trading, as seen here. So our aim is to help you determine no, not help you. Our aim is to share our insights on how to determine daily bias, weekly bias, and even monthly bias. And that is the major role we play. So it is now depends on you to think what you want to make use of, how you want to make use of the information, whether you want to use it as a daily, whether you want to use it as a learning purpose or as an educational purpose. So it just depends on you. But please, I would do honor you to make sure this content is for uh, learning purpose, which is educational purpose, because that's the basis of this whole thing. I'm not giving you all this so you can go and invest your money, but if you've worked with me for a very long time and you see how precise I am, you can now decide on your own whether you want to risk money on it or not. So if you make money, you don't have to come to my DM and say, "Oh my, I make this money." No. If you lose, you don't have to come to my DM. "Oh, you are full of bullshit," or not. I knew that I do this and I make money from it. So it just depends on you, because how you coordinate or how you organize yourself is more important than actually this trading itself. How you are organized, how you react to certain situations that occur in the market. So since we have a lot to discuss, if I can't finish it, I'm giving a weekly market review on Sunday morning, which is on Sunday morning, so I'll be able to recover us from that. And I'll not be spending much time on the XY chart, but we still need that chart. I'll be spending much time on the XY on the weekly review, but this I want to be able to cover a whole lot on the daily market review on Euro, because there is a whole lot to look out for, as this is a very, very as is this will be the beginning, or whatever we say now will be the beginning of what we are looking forward to next week. So let's dive in. The Euro US dollar daily contract for Friday, 12th April 2024 deliver continuously lower, right? We deliver continuously lower, sweeping sell uh we deliver continuously lower, sweeping below the Friday 10th November 2023 low, which is a swing low. Now look forward to where I'm referring to. I'm referring to this low that I added this thing for the purpose of this video, and I'm going to get it off as soon as I'm done with this video. We deliver the Friday contract, deliver lower all the way to this, but fall short of what? Sell side liquidity, and close below that sell side liquidity, which could not offer the delivery of price back into the weekly range, right? So we know on an ideal, now look at two things that actually happens when that is why my mentor says that you need to observe this market for a series of a long period of time. You're going to learn different things, and I learned something different this week. Now we know that an ideal weekly range. All right. The Tuesday is supposed to be the high of the day, the high or the low of the week. If we are bearish, it's supposed to be the high. Then if we are bullish, it's supposed to be the low. And now the Friday should be a reversal back into the range, the weekly range before the market close. Now, what happened this week? The Tuesday formed the high of the week perfectly, and we're anticipating for Friday to do what? Recover the weekly range. But what did it do? Continuous price delivery. Continuous price delivery. And I am very pleased to see Euro deliver price impulsively lower and leaving the daily fair value gap and inefficiency above on tap, which is confirming that price is seeking external liquidity, and the next major liquidity is the Tuesday 3rd October 2023 low, which is this particular low is formed on what? Tuesday 3rd October 2023 low, which is the monthly external what? Buy side sell side range liquidity. Sorry, external sell side range liquidity uh, as the next what? Potential draw on liquidity. So that area is our next potential draw on liquidity. Casting forward, I am anticipating for Euro to price into the ICT fair value gap or BC formed on Thursday, November 2023 low, and that should derive price higher and to give the short-term retracement before price drop into the draw on liquidity. Now listen, right? If we're looking forward now, that way if we cast forward imaginarily, because we have not seen anything happen, so we are imagining something that might possibly happen in the future. So cast, that's why I use the word casting forward. That is, it has not happened, but we are proposing that supposedly it should happen that way, and that does not mean it has to happen that way, right? But let's see what I explain. Let me explain what I'm trying to say there. What I'm trying to say is that I'm looking for price to open next week, price into this daily fair value gap. You can see there is a daily fair value gap here, which is formed on what? On Thursday, 2nd of November 2023. Now that low, that fair value gap, if price gets to that area, I'm anticipating or I want to see that fair value gap be able to derive price back into the monthly range. Now it's no longer weekly range now, because a series of 2 weeks now becoming now forming what? Monthly range. So back into the monthly range, and if we get back into this, we have this weekly what? Bearish order block. So there might not be any reason for price to get here, except we want to make tap on this daily fair value gap. And if we did eventually get to this price, we are going to treat that fair value gap as an institutional order flow entry drill, right? So that is very, very important, and that is what I am indicating there. Now the euro can also find its way higher into the daily fair value gap and treat it as an institutional order flow, just like as I've explained. Those there are these wait there are these sorry those are this potential area I am anticipating for price to drop before rallying towards the monthly external liquidity. Sorry, I was mistaking the statement. Okay, I made a mistake. And what I wanted to say is that those, that is when you are like saying does, THUS, does, these whole PDRs or whole scenario are the potential areas I'm anticipating for going forward next week, and I want to see how price reacts on these areas, and that will determine how I will what anticipate and how I myself will react with price. I hope that is very, very insightful. So let's go to the daily contract on Euro, on the XY, sorry. So that has brought us to the XY daily contract, and we have similar keys here. Now the XY has purged toward this buy side liquidity, and this buy side liquidity was the retracement that tapped on this bearish order block. So we are no longer anticipating for this bearish order block to be effective. So as we are no longer anticipating for this bearish order block, then the fair value gap it created might not be effective as well. You understand that? So but we have liquidity void here and also the fair value gap here. So if we are looking for these two scenario in price, we want to see price get into any of these area. As soon as price gets here, we want to see how price treat these areas, because we must let me not say must, there must be a retracement in price before we get to this external buyer side liquidity. And if you stick with me, I'm going to explain more on this particular time, on this particular price on the weekly market review. So I'll be going to the daily market review on the euro market review. Sorry, oh yeah, the euro. So now we go to the 4 hourly contract on euro, and we're going to bring things out and see how we what we are looking out for and how we want to see markets treat all these areas. Now the euro US dollar 4 hourly contract shows a beautiful price delivery lower, and how it treats the inefficiency, and how it is the inefficiency above, and lower price lower, giving me a new understanding of the market. Now listen, you see how we treat this fair value gap. What I'm trying to say is this fair value gap. We see a fair value gap here, and look at we treat it as an institutional order flow. It's something I already knew, but now because it is Thursday, right? It is Thursday. I wasn't anticipating for such price move, right? But Thursday did not deliver a more range. We just remain on a what tight range, right? And that tight range is what and we feel this in fair value gap, which is another reason why we are not to see price come back into this range. Just like a scenario that happens before, and I was, where can I find it? Yes, I could. If I can find it, I will know the day. You guys should go back to that day and learn and look at it, because there is something that actually happened like this. And I say that since price has already done this, it is just as equal as this. But if I can find, I'll try to do that on the weekly market review. If I can, I will find it. Yes, okay, I have. Is it? Yes, I have this particular area in price, which is if you go to my YouTube channel, go to on Thursday, 21st March 2024. Go and watch the video for that day, you will see. Now, something happened, and I call this out, that since we have reached this fair value gap, I'm not anticipating for price to go higher. And what happened? We did not go higher, because we have already reached this fair value gap. We did not go higher. Now, price keep going lower before eventually giving us higher price, but we have already what anticipated the lower price delivery. So likely same thing is going to happen here. We have seen this, and since we are heavily bearish on the higher time frame, so reason why we are not looking for any form of sharp retracement. But if we did get here and we use it to go lower, then if we are coming higher, we are no longer be anticipating for this to be effective. Know when something has expired and when something is still active. So like this PDR rate, there are times they have expired and there are times they are still active. If you are able to identify this, it will help you a whole lot. So that is what I explained by that statement. Now on the 4 hourly contract, we can see that Euro has delivered a long range low a long what sorry a large range lower and close on the tips of the daily candle, showing or indicating that price is still heavily bearish, and that does not mean we won't see a price retracement higher before pricing lower into the area of liquidity. Now what I mean is that with the current close in price, with how price close now, we close on the tips of the what daily fair value gap. We did not even retrace, sorry, we did not even retrace lower into the weekly range. So that indicates how heavily bearish we are or price is. And so since we also have a fair value gap here that has not been tapped, well, I'm anticipating for us to tap it. Either we're going to use it or we're going to use this upper one, but I prefer this upper one. That's why I indicate it with a color like this. So when we get there, it's going to deliver us into this word daily fair value gap or BC, this daily fair value gap or BC. All right. So if we get there, then we're going to see a retracement higher, but not to price above here, but within this price range. This is the weekly world bearish order block. So I'm going to talk more on this weekly bearish order block on the weekly PDRS on the weekly contract, since that then we'll be able to show this bearish order block effectively. So when price get to it, then we're going to see a reversal that is maybe either going to take us towards the major sell side liquidity, or we're going to see price start going lower. But whatever be the case, let's see what they are trying to indicate in the map, like what they are trying to show us. But all we have to do is to have our own observation in price and also know what we are looking for. So with that, as that will serve us a whole lot. Now the 4 hourly contract for DXY, we have the weekly bullish order block. Now if you see, this has already tapped on the bullish order block and also clear liquidity, right? And also tap inside inefficiency, you know, getting inward the what is it called, the smart traders will be able to see this occurring. So and price deliver higher, taking out this buy side liquidity, and now this is the fair value gap and the liquidity void on the daily time frame. And now I'm anticipating that if we continue to go higher like this, we're going to see a correction from here, or if we open and we go lower, either we take off up from here or from here, or we see a retracement into this bullish order block that is going to take us up to this buy side liquidity, maybe up to this buy side liquidity. But I'm not expecting such a big what retracement. And also, if we want to, where's my cursor? Okay, also if we want to see price, we can actually take our Fibonacci. We want to see the 50% region for this whole price delivery. So we have the 50% region around this area. So why I want to see price get towards that area before we continue going higher. So that is it, and I'm going to go to the hourly contract on Euro before our time collapses. And this will not be enough to explain this hourly contract, and I will dig more on the on the weekly. I will dig more on this lower time frame contract on the weekly video. Now the Euro US dollar hourly contract shows how nicely price delivered effectively lower for Friday 12 April 2024. The daily profile for that Friday is an obvious 12 o'clock AM New York local time as the high of the day that begins lower price delivery from the New York opening price, and the low of the day is formed at 10 o'clock AM New York local time that price below the daily swing sell side liquidity and fall short of the daily fair value gap or basic. Now on the hourly contract, we can we can refine the higher time frame, which is the 4 hour daily and weekly time frame PDRA, into a series of what lower time frame PDRA shown in this chart. Now, what I'm trying to say is that from the higher time frame, all those PDRA, we can now refine it into an hourly fair PDRAs, just like I have indicated with this arrow. We can have, this is our weekly bearish order block. So anything around this area will be very, very effective in price. So that is something we need to put our so that's basically something we need to put our eyes on. And we have a sorry we have a relative equal high on the hourly contract that coincide with the nearest 4 hourly fair value gap, which price will deliver into and price lower into the daily fair value gap. That will be the catalyst to deliver price back into the retracement back into the weekly bearish order block. Sorry, this is the end of this video. See you on the weekly.